So nice to see you. Good crypto morning to you, JP. How's it going?
Good crypto morning to you, Brandy.
I know, I love it. We're just getting started here. I'm so excited to spend this time with our audience to showcase what we have coming up. So we have quite the lineup of some events happening in the past week of crypto. Do you want to share some excitement about like what's coming up? Tease the audience a little bit about what we're going to be talking about.
There's so much going on right now. It's really hard to pick one. We get a little bit about Jack Dorsey and some Tim Cook drama. That's always fun.
Always fun. They're always at it. Pretty soon we're going to see them too going into a boxing match, kind of like Elon Musk and good old Mark Zuckerberg.
It would be funny if this like kicks off a celebrity death match type of thing.
Who'd win?
I'm leaning towards Mark. Elon is larger, a bigger human, but Mark like studies jiu-jitsu, judo. He's a student of the craft.
He has been very
I'm
impressive.
Judo myself, and it's not easy. It takes a lot. It takes a lot out of your body. So I would say Mark is hardened.
Yes, I agree. I did jiu-jitsu as myself. Really enjoyed it. Not the best, but what happens if Elon Musk decides to go ahead and utilize Neuralink? Like, is that kind of an unfair advantage? I mean, at that point, like, ooh, ouch, what?
We get into like the full matrix.
Could I know?
Yeah.
Oh my goodness, poor Mark at that point. But yeah, it does. I do believe he has a little leverage in that one. But when it comes to like Jack Dorsey and good old Tim Cook, like the bout there right now that's happening is really about control over a marketplace that has been untapped and an unfair advantage. And what I mean by that is like when we look at cryptocurrency and we look at the classic players, Bitcoin, Ethereum, and so forth, what's the excuse for Apple to still hold back participation on an open network that has global marketplace participation? It seems a little unfair that somebody that provides global service and support is holding back a community. And that seems a little unfair because, there's some powerful tools on our mobile devices that would end up increasing the security of these assets, especially consumer protection. And I think I'm hypothesizing here, and JP, I'd love to hear your thoughts on this, but wallets, right? Managing your crypto, like for us techies, we understand the value. We know how to do it. We can work with the ways that the fundamentals are for wallet management, for like self-custody of your assets. But for the everyday consumer, that's just not the same story. They don't want that. They want something that's as easy as your microwave oven to, type in how long you want to cook for and press start. They don't care about the operating system. They don't care all about that. They just want to know that they can cook safely. And I think that's the same thing when it comes down to these digital currencies. And Tim Cook is playing a bit of a monopoly here on access to these services because they have their own financing. They have their own, like I believe you have Apple Cash now and Apple Wallet.
Absolutely.
And so that's a bit of a competitor, right? And so holding back crypto is a monopoly on that segment in regards to micropayments. And it just seems a bit unfair.
So a lesson that I've learned long ago is that organizations that have power, once they accumulate power, will do all that they can to retain that power. Right? And organizations also want to continue expanding to get larger and larger. And from that perspective, it makes complete sense that Tim Cook is taking the stance. We've seen this in the past with Riot Games, if you recall that, and Fortnite. And they went to the courts. Right, and even today now, you Fortnite on all sorts of platforms, but you cannot play it on a Mac. And we're seeing this play out now again with Apple, Tim Cook, and Jack Dorsey with Block and Blue Sky and accepting crypto payments. So I think this is a battle that was brewing, has been brewing for a long time. And Jack Dorsey is going to be pushing it. And it makes me wonder how long Apple can retain this monopoly. I am long-term. I am bearish on the App Store, holding on to this power. Now, how it'll play out in this round, it's hard to say. but I think that this is going to continue being pushed, right? Apple is going to continue being chipped at. They've got amazing products. We're going to see them be a company for a long, long time, but the monopoly of the App Store, its days are numbered.
Its days are numbered. I agree with you 100%. 100. I hate, one thing I have a pet peeve about is when folks say 110%. Like, oh, you're giving extra effort. But it's like the glass only can get so full, pretty soon it overflows, right? I'm like,
the max. Making a mess on the dollies.
Yeah, it's like, no. If it's 110%, that's a metric. That means you're only giving me 55% effort. I'd rather get 100%. But really, when it comes down to this monopoly, I think about today's world where we're looking at the stock market. We're seeing risk of recession. Everybody's talking, like in the United States about recession, month over month, it's coming. We know that it's bound, ebb and flows of a marketplace, but we're in a global world. And right now, like when we look at crypto markets and we see things like Bitcoin, things like debate between Jack Dorsey and Tim Cook, I mean, that's really concentrated to the United States, but this is a global marketplace we're talking about in regards to Bitcoin's reach. It seems odd to me that all the analysts are saying, hey, we're in a recession, risk off, risk this, they give all their analysis, which I love. I love listening to them, but speculation, kind of like what I'm saying here, kind of speculation, but I'm speculating that they're wrong. I'm speculating that United States is one ingredient to a global mix of a recipe for basically global store of value with Bitcoin. And just because the United States is going through a recession doesn't mean that Bitcoin needs to suffer. And so I think that's kind of where the analysts get us wrong. And then when you think about going back to Jack Dorsey, going back to the debate with Tim Cook, I mean, Jack Dorsey has a history of supporting crypto. Tim Cook has a history of supporting digital payments. It only makes sense that this would be natural to come onto the platform. The problem here is this monopoly and the fact that today Apple is at a near of a $3 trillion market cap. $3 trillion. I mean, that's more than the entire cryptocurrency market by almost 3 times. It's kind of baffled me that people think that it's going to continue to go. What it's 3 trillion, so it's going to be 10 trillion. So then what is the monetary value globally? How would that impact Bitcoin? I mean, are folks really looking at the long-term sustainability of Bitcoin as a store of value? I think it's being underestimated. Absolutely,
it's underestimated. We've seen. So if you want to talk about the ETFs that we've been seeing, and we got Blackrock that jumped in, and it skyrocketed the price of BTC. Right, it's like throwing a big rock into a little pond, makes a big splash, sends out big ripples, and now we're elevating the price of Bitcoin. Right, we've touched 31K very recently, like the last 48 hours. We're sitting around 30,500 or so at the time of this recording. So we're seeing institutional players are starting to come in, and they're recognizing Bitcoin as a store of value. We've got a story coming up about government bodies that are beginning to recognize digital currencies as potential stores of values and hedges against inflation. So these are very interesting times to be in the crypto industry. Recession or not, the bear market or not, Bitcoin is getting its turn, and it's getting its turn in the public eye. This is exciting. This is what we've been asking for, right? And it doesn't really matter to me if the institutions believe in the decentralization aspect, or if they believe in like the ideas of crypto and kind of like that whole crypto punk mentality. They're saying, hey, this technology is solid and not going away anytime soon.
Yeah, it's really interesting because I think that a large part of the world is missing out on one core fundamental about marketplace participation. There is 2 core areas that mean the most to marketplace valuations. You have basically first world marketplace, right? All the central banks, the connection, United States, Euro, Canada, all that stuff, first world market. I might even be saying that wrong, but just go with me here on this one, right? Sure. So United States, Canada, central bank connectivity, Fed, the influence. But we have a global marketplace that's actually much bigger when you look at emerging markets. And I think folks are underestimating the power of these emerging markets. So sure, it's super exciting what's going on in these first world markets, what we're seeing like with the ETF, volatility shares, how they launched their 2x Bitcoin strategy, BITX on CBOE, which is huge. That just started trading. But this to me is really a first world problem, right? It's like, how can we get access to an ETF on the stock market utilizing 2x leverage? I mean, I'm not sure, I'm not confident, I should say, that the emerging markets care so much about that. I think what they care about is that more liquidity is coming in so they can have greater dependency to play in a sandbox that has global reach.
Yeah, liquidity is going to be an important aspect of this, right? So we have had liquidity problems in the past. We have volume, getting more volume, more liquidity. These are going to create a more robust market. I think you keep talking about this global aspect. And if we're thinking about app stores and stores of value, we need to begin to step away from the nationalists, like a nation state mentality, and have more of a global mentality. We're in a global, this technology is global. It absolutely spans the world. We could see, like, you're not going to take USD to Mars, but you might take Bitcoin to Mars. You might take Ether to Mars, right? IPFS is literally called an interplanetary file system. Like, the people who are creating these technologies are thinking large scale. We're not thinking nation state scale anymore. We're thinking global. The topics that we're talking about has got me thinking about a decentralized app store, right? Apple is getting like a 30% take on every sale that comes through. That's huge. What if we start creating, it's hard to find decentralized apps. It's difficult for normies, even for techies. You've got to do quite a bit of research to see what's out there. What if we had our own app store, decentralized app store? That would change the game. Okay, you can access it with greater ease. We've got the convenience. People love convenience, right? So we've got the convenience, and hey, now you're not paying a 30% fee. Maybe there's a royalty fee that is baked into it. It's not going to be 30%. Those days are going to be over.
Absolutely. They are limited. I do believe there's still value, right? Especially when it comes down to consumer protection. And that's something that I really love about Apple, the standardization to provide security to its consumers. There's times where centralized authority is a value player in the marketplace, and in large part of marketplace participation now depends on that. You know, in the world of crypto, Web3, I think we're all seeking that in a decentralized way with what we call trustless environment, where we don't need to trust. We know that the technology from an algorithm is trustworthy, but still the average consumer, for that widespread adoption, you know, for this global marketplace, they need some type of security because they've lost, you know, there's been a lot of scams, and how we provide them trust is going to come from things like Apple providing context on a roadmap for how it's going to adopt. Same thing with Samsung. Like when you look at Samsung and Android, these marketplace players that have large consumer base globally, they have security chips built in on their handsets. You know, Apple has that T2 chip on the handset, so that way it has encryption baked in each device. And same thing with Samsung. So there's the easiest way to provide security in a crypto global world when it comes down to managing assets for self-custody to consumers. But I mean, regulation is probably the biggest risk. On one side of me, I think it's just complete monopoly from like Tim Cook and Apple, but the other side of me says, Brandy, you need to check yourself. We have tons of hurdles still in front of us in regards to regulations. These regulations absolutely affect players like Apple. They're a publicly traded company worth $3 trillion. There's no way that regulators are going to allow them to just make any decision they want. So it's really an interesting time. But I do want to mention, I'm super excited about what the advancements we are making into ETFs. You know, we've been in this game for a while. You know, 2014, it was teased ETF, and here we are now, 2023, and we're still waiting for an approval.
Right. Well, so this new, they've been approved.
they've been approved. Well, BITX has been approved, BITX on it.
Right.
Yeah, June 27th. But the problem with that is that it's not an actual spot. The underpinnings of the asset is not being traded.
Right. It's not.
It's paper contracts against future contracts. It's just a peg to future contracts, and that doesn't excite me. Does it excite you? I mean, it excites me that we're making advancements and that these options are available
It's
for
the
players.
advancement, right? It's not like it feels like a half measure. So yeah, it's like it's not quite there. It excites me about as much as like owning Bitcoin on Robinhood, where you can't even take it out. Like that's not exciting at all, right? It's kind of an anti-climax.
It is. It makes me think about gold, right? Like everybody
Right.
get gold. Well, how do you get gold? You're gonna have to. The best way is to self-custody gold too. Like this is not anything new. What's happening with like Bitcoin is just a next generation native to the internet, super powerful. But gold itself is traded. It has futures. It has spot. But I don't know anybody that's ever claimed their gold when they purchased it through Robinhood, E-Trade, anybody. I don't know anybody that says, I'm going to call my gold. I want it delivered to me now. So what makes me wonder, are they just printing paper contracts and that the underlying asset is really not being truly traded? It could be manipulated. That's my point.
Absolutely. And if it can be manipulated and they can get away with it, you can trust someone's going to take part in manipulation. Too big of a temptation for someone with questionable ethics to say no to.
Yeah, and that's why I'm so excited about spot ETF, because I think this is going to totally change the way that we look at tokenization. Assets of everything. When I think about my Tesla stock, right? I only got 5 Tesla stock. I'm not thinking of Tesla Richie, but I at least have 5. I'm super excited. I own 5 of them, right? I'm like, what if I want to give one of those Tesla stocks to my mom? I can't just transfer that stock to her. I don't have a way of doing that. I'm going to have to sell it, help her start an account, help her fund it. It's like, what an awkward way to help support generational wealth, right? It's like if I'm trying to help my mother who's retired have some type of monetary value in the future, you know, it's really difficult today's term where like the future of tokenization is like, well, to me, Tesla should be a stock that's tokenized that I can send to her instantly without needing permission. And that's the whole point about a trustless world. That's why, to me, we have all these Bitcoiners saying, no. Bitcoin is the only place the value. Everybody's going to build on Bitcoin, even good old MicroStrategy, right? Like I love what's being said there. I love Bitcoin. Like, yes, I tell all my friends and family, if there's one thing to invest in, it would be Bitcoin, Ethereum. And then when you fully understand that, dive into the other world of Web3. But when it comes down to it, it's like a world without Web3. Why don't we start looking at that? It's not open and inclusive, a world without Web3. And I love this whole idea of an ownable world with Web3 services. And that brings to life what I was saying earlier about tokenizing like stock assets and be able to transfer it to my mom without having to ask permission. Like that will build wealth over time, give access to people that typically don't have access. My mom doesn't really know how to invest.
Well, I think that's coming, right? This is before the 1930s. Families did transfer wealth. They had this generational wealth. It may not have been enough to be a lord of an entire manor of a region, but people would give as wedding dowries, as gifts to newborn children, gold, right? And they would pass off their gold from generation to generation, and it was an object that you could hold in your hand. And families did that before the 30s, and they did that for hundreds of years. In the 30s, the gold was confiscated and used for war. And so now we give diamonds, which one day we're going to realize are just pretty worthless rocks. And, you know, it would be not likely. I think it's not as likely that we'll go back to giving gold as dowries, but we'll be giving Bitcoins, and we'll be handing over our Bitcoins and possibly other crypto assets to our generations of families down the line. And we won't need an intermediary party to approve of that transaction. And so this time frame that we're living in, this like blip of centralization that is like all that we know, I think it's past. So if we mark this as like the height of it was the 50s, and you could say maybe it started in like, I don't know, 1920, 1930, that's been 100 years. So we could say it'll last roughly 100 more years. We are on the waning side of this idea of centralization now. and within the next 100 years, it'll all be like a bad dream.
Yeah, a bad dream for sure. You know, Wall Street's jumping in. They've been totally interested in this. It's clear advancements have occurred. Jamie Dimon, what a bigot. I mean, gosh, talks crap about Bitcoin, says it's junk, and then in the back end investing heavily in the space. It's just crazy to me, the games that get played that ultimately hurt the everyday person. The everyday, you and me, everybody else that might be watching this, the product developers in this world trying to look at increasing value and access to new services. Like, these are the people that matter the most. They're the real builders. They're the real ones that are going to, you know, working in the trenches. It's just so interesting. I take it you're not selling your Bitcoin, right? Like,
Heck no.
No. Yeah, I don't think
Look,
either.
if one is held through this market, if one has been able to hold through this market, you can hold through anything, right?
Yeah, I was reading up on, like, what's it mean to be rich in Bitcoin? It's like only 0.02. Because that's it. It's like in the future, you're looking at, you know, 8 billion people in this world, but 6 billion connected on the internet. 300 million, I believe, is what the statistics, and I don't know, we can check this out later, but there's, you know, millions of participants right now in crypto, not billions. I can confidently say that crypto is going to get adopted to billions. At least I think that's why we're here. And so that is just so huge. And so something we were talking about earlier was about Wall Street managing $27 trillion. What a tsunami, $27 trillion. Can you elaborate more? Why is that important? And how will this affect the marketplace?
Right. So it's not to say that they're managing $27 trillion in Bitcoin or other crypto assets, but Wall Street institutions that are responsible for managing $27 trillion in fiat currencies have launched or are launching spot ETFs, or, you know, are pushing this through for approval with the SEC. And this is significant, right? That's huge amount of money. This is like BlackRock, Fidelity, JP Morgan, who you just mentioned, Morgan Stanley, Goldman Sachs, BNY Mellon, Invesco, and Bank of America are all interested in getting into crypto assets, having spot ETFs, and this is significant money. So even if they put, you know, 5 or 10% of those assets into crypto, that is an enormous amount, and I can't say what that will do to the price of Bitcoin, but surely it is going to appear to be a very large jump.
Very large. I mean, right now the market cap of crypto in general for all is like 1.19 or something like that. I mean, we're down there compared to 27 trillion tsunami that might be hitting the market. But I do think of things like what that means for corporate infrastructure. I love the idea here that's going to build value, but I'm more excited about the utility power of this. And I think about MicroStrategy, and I think about this 27 trillion, and what that would do to MicroStrategy's valuation. And then what that's going to do in regards to being a bit of a virus to corporations. How do corporations effectively hedge in today's digital world? It's going to be cryptocurrencies, Bitcoin. There's going to be a basket very similar to IMF, you know, International Monetary Fund is taking all the leading currencies, they create a basket, and they're actually arbitraging this basket and then doing loans to countries, right? That's why IMF was so distraught about Bitcoin. And now they turn recently purely on the basis that they can't control it. They just proved to the world that somebody with global roots into a finance system cannot control Bitcoin. That's what just happened. And I'm like, this is crazy. I don't understand why people don't see this as a huge opportunity. So going back that 27 trillion tsunami and MicroStrategy and why that's important, I'm looking at the way that corporations manage treasury reserves. If I was to start up a corporation right now that was worth some type of value, I would want to hold that value in a basket of cryptocurrencies. I would. That I believe in, because I'm like, look, that's long-term sustainable. I'm in the game for long-term. I want my company to be as successful as possible. The employees need to be taken care of. This is an investment. I want an investment in the future. Hey, that's cool. Maybe it should be a part of a percentage, but I think gold's percentage has dropped so much in regards to value prop because of its maintainability. It's so hard to maintain. And then I think there's that even issue that when we do migrate fully over to a tokenized world, like that just, I don't see any other world ahead of us. It's going to get tokenized. When that happens, I think we're going to see the real cause and effect of market manipulation from legacy players. We're going to find out that, wow, they're selling stuff as if they have it, but they don't. They're a bunch of liars. Like, this is going to cause a complete lack of faith. When that starts going out, that virus is going to go to all the people, all the corporations, and they're going to reposition themselves and look at how you're going to not only do personal generational wealth storage, but corporate infrastructure. And then corporate infrastructure is going to affect the way that policymakers look at policy. They're going to look at the way that they do that for services in regards to the way they facilitate GDP, the way that economics is traded. I believe that this world of ours, digital, is largely becoming the main basket of services. Look at United States, just got done putting out warning that AI chips are going to be restricted going to China. Like $3 trillion with Apple, something I want to mention right here, right now, that I think is very speculative, but it's just my opinion, is that this AI chip thing is going to even cause fallout to Apple, because I recently purchased a MacBook Air 15 inch. I love that thing, super cool, but it came from China. And I'm like, wow, that chip, that M2 chip that's out right now for a MacBook has accelerated processor, basically a bunch of ASICs on the chip, right? And media encoders, AI ability, GPU cores, all this stuff that helps facilitate artificial intelligence is baked in on that chip. So in a sense, that's going to cause restriction to M2 chip in China, which that's going to affect the market cap of Apple. I don't hear anybody talking about that.
Second order effects are harder to think about, and most people don't think about. We only think about the first order effects. We're going to restrict this. This is what we're going to do. All right, what are the consequences? What are the and how it is? I don't know about you, but I still remember the consequence conversation that I had with my grandmother, and I remember the consequence conversation I had with my father, because they were the most terrifying conversations I had as a child, and I carry those. And how, like, these policymakers just completely miss all the second order consequences is beyond me. It's childish. We're moving rapidly into a world that is going to be less controlled. I think you're going to see a transformation in corporations. They're going to get smaller. I think we're not going to call them corporations too much longer. We'll be calling them DAOs, and they will be nimble. They'll be, you're going to have 3-person DAOs that are going to own like $1 billion in assets and more. You're going to be more nimble. It's going to be power to the people. Between AI, if we do it right, and blockchain, self-custody, if we do this right too, there's definitely like a dark side, a dark future. There's the dystopian future that we can create with these technologies, which is absolutely terrifying. But if we can do it right, then this is more freedom for people. It's more empowerment for people. It allows those who have ambition to do something, and to be their own creators, and to create their own life, and to have meaningful generational wealth that is not so easy to steal as like it was to confiscate the gold. We're going to be able to create that. And so this is part of what we're doing here, is the education and knowledge. We want to take these like complicated subjects, break them down, make it easier for people to understand, and help people see that, hey, crypto is not necessarily some like crazy, scary, scammy thing. There is real technology under here. It's got a real future, and there's a foresight and there's a vision to this, and there's people of integrity, a lot of them, who are building real products, despite like the scammy stuff that we're going to see, such as like the Azuka NFTs, if you want to talk about that for a minute, right?
Yeah. I do want to just chime in on one thing. I just want to say there is value. There is value for having our government formulate control for the population. That's why governance exists. It's to govern a body of citizens, right? And we need fair marketplace participation, and that's going to come through government policies. The government is ran by people. It's us that get elected to become part of the government. Democracy is important. I definitely would like to just say right now that I champion our government leaders, and I believe that we need leaders. I love DAOs, but I've seen a lot of fallout in DAOs. I've seen a lot of lack of leadership in DAOs that causes confusion and manipulation, and turns into potentially, scammy stuff in the background. It causes trust issues in a bit. Just because you create a DAO doesn't mean that you're immune to the problems that happen in traditional corporate infrastructure. Actually, sometimes it creates more problems because you don't have that leadership there. And so, that's why there's value in having good, sound regulatory advancement driven by people through a democracy, not a dictatorship, right? And I think that's one of the value props of DAOs, is that you can be decentralized with your, a decentralized autonomous organization, is to help prevent that. But in a sense, it also creates it. So it's like, there's nothing perfect. We're just trying to find a balance.
Right.
In math, it's like you find your sine waves, right? Like one reason why I love trigonometry and math. But we're fleshing out players, and we talked about it before. This is a flush, and it's something that I would like to go into. Why I want to mention that, because like there's value in governments, there's value in regulation, but there's also value in having fair marketplace participation, which comes from the people, because the people is what ends up creating, working in the government, creating these policies. But when it comes to Azuki, share a little bit more about that. Let's go ahead and go on. I don't want to rant too much on this because we could probably talk about a lot. We'll do it more.
Yeah, for sure. I want to say, like, maybe I think about DAOs differently than most people, but like when I think about things, I don't think about like taking the people out of the equation. I think about like how can we empower individuals, and how can we empower small groups of people. I think we're missing that. Large groups of people are empowered, and I want to use technology to give more people voices. Right. It's going to get noisy. There's going to be a lot of noise out there. I mean, you go to Twitter, there's a lot of noise, but there are signals as well. A lot of life is about finding the signals that are meaningful and relevant. So, yeah, Azuki was a signal. This was an NFT that was respected and had a rabid following. And they announced a new set of NFTs called the Elementals, and they sold like they had a pre-sale, right, for their most loyal fan base, and they raised something like $40 million in 24 hours or however long, the details. Okay, they raised $40 million on the pre-sale, and then they released the entire collection, and it turned out that these Elementals, from one person on Twitter, they called it the Walmart version of the Azuki NFTs. And then overnight, that whole ecosystem lost 44% of value.
Ouch.
Yeah, big ouch. And it's not just an ouch for those holders of the Azukis or the pre-sellers of the Elementals. It's an ouch for that company is their biggest fans, so they screw them over. This is a reason I hate crypto. Like, I love crypto, but I hate it at the same time at times, because of like these scammy companies that are out for $1. They've raised $40 million. They kneecapped their fans, like their following. I see this all the time. I see YouTubers doing this, creating their coins and saying, hey, we're all going to be millionaires. We're all going to moon together. And then they kneecap them and take the money. And they might do that for a couple $1 million. And, I'm sure that's a lot of money, but hey, you just kneecap your integrity.
What is kneecap? What is kneecap? Right? Is kneecap rug pull? Kneecap?
Yeah, it's like a violent rug pull.
Oh, violent rug pull.
Violent rug pull. If you kneecap someone, they're like, it was the Olympian. I'm gonna age myself. Was it Tracy something? The Olympian ice figure skater got kneecapped, right?
I remember that. Yes, yeah. Where she was a strong competitor and she wanted to take out her competitor by hurting her. Okay, I didn't get it. I just didn't get it. Like rug pull.
I know this is rug pull. They rugged them. They needed to kneecap them, and then they rugged them. It's the 1-2.
Ouch.
And how are we going to talk about mass adoption when we've got like projects that are doing this on the regular? I know you've been rugged by projects. I've been rugged by projects. Anyone who's been in the industry, I saw recently, I forget, I don't remember the artist and I don't remember the projects. If you do, help me out here. That basically all of the NFTs on OpenSea were all changed to the same exact picture, like whether it's a poop emoji or whatever, and the artist said, crypto is for the flippers. And I think about that statement a lot, like crypto is for the flippers. And how are we, and that may be so, maybe it is for the flippers, but how are we going to build something of lasting value if it's all about the flipping, right?
Well, hey, let's just go back to that. There's value in flipping, right? I don't like flipping. It's too stressful. It makes me lose sight of what my long-term interests are. So I'm very, I have two baskets that I like, I have the basket I like to play with and experiment technology, and I have the basket where I'm like, this is long-term, this is my future. So, I lost that future several times because you need money. So then you have to sell your assets. Nothing hurts more than when you're forced to sell because you got to pay bills. And I'm sure a lot of folks can relate to that. And it's like, that kind of sucks. And yeah, being rug pulled hurts. And there's times where it hurts your confidence. But these players, these people doing this, they're manipulating the user base. And that's not just exclusive to Web3. That's not exclusive to Bitcoin and Ethereum. That's marketplace. I mean, when we look back at history and look at banking, when we had horse and carriages, I mean, when horse and carriages were getting more advanced in their efficiency, and like Wells Fargo was, transferring one township to another, bank robbers got smart. They started adopting the same technologies as Wells Fargo to go ahead and rob them. Like, you just can't have that, we're fully protected. We're not going to have scammers. Unfortunately, we're not immune to that, right? Like they're always going to exist now in the future. One thing I know for a fact, scams will always be there. Mitigating risk, education, user best practices are definitely the best way to protect yourself. I've made mistakes, but when I look at it, it was really my fault because I should have known better. I'm very educated. Why would I sit there and let that happen to me? So it hurts my feeling box when I get scammed because I'm like, I should have known better. I feel bad because I didn't educate myself enough. And I think that hurts more than just the financial loss. Of course, now I'm thinking about financial loss. That sucks because then I start thinking about how I would have more Bitcoin. Damn it.
Yeah, we'd all like more Bitcoin. And now I'm thinking about someone in the future is going to take that clip of me saying I hate crypto and use it to
right? Oh,
send bear signals. That's some big project I'm working on.
Right? Oh my goodness. Well, it's really interesting. Like the NFTs and Azuki, that sucks what happens, but let's not let it lose track of the real line of sight. The real line of sight is tokenization of assets. NFTs, digital art. It's like, reminds me of pet.com during the .com era, where pet.com got this $1 million valuation and it had nothing but a domain name. So it really didn't do any utility.
It's kind of like the AI company that's 4 weeks old and got the $180 million valuation, right?
Oh no, AI, yeah, right? I think people are missing out on the real core fundamental. We have so much advancements in regards to technologies. We have the pillar of crypto blockchain, right? Web3, that pillar. Then we have AI, which is another separate pillar of innovation. These are absolutely going to change the way that we perform daily activities in marketplaces, finance. I mean that with both blockchain and AI. So I think people are missing out on the real incentive here with these technologies. That's a convergence of them two working together. That to me is really important. We're seeing it right now. OpenAI is being sued because the data set has been trained on people's data without permission, right? And so how do you solve that? You solve that with blockchain, right? If AI had their training data on blockchain and it was transparent, how could they be sued?
I want my data payment. I want my check for all the data that I've created that has made these companies trillions of dollars. And maybe with blockchain, we could do that.
Oh, we absolutely will do that. We have, folks like you, myself, and everybody else out there that are looking to be innovative in the space, are looking at things like convergence of these technologies and to build. And so it's the builders, right? Like, we love builders, we love developers, we love product leaders. Like, it's full circle. Everything it takes to mature this marketplace in general is super powerful. More interesting is the fact that when we look at the convergence of these technologies working together, how it actually gives power to the people, right? It's like, finally, for once, you can own your data. Finally, for once, you could depend on it. You don't have to worry about the corruption of people because it's transparent. There's an order of things. We have this technology. That's why I'm such a strong proponent for both Bitcoin as a value store, its utility power. Utility is the number one thing that excites me about blockchain space, including Web3. So I'm a big believer in all these technologies working together, better together, united. We stand, divided we fall. It's like, when you have just the Bitcoiners out there saying, oh, everything else is junk, you'll see it. Like Michael Saylor is saying, hey, all these, everybody's going to migrate away from Web3 and go to Bitcoin. I do believe that Bitcoin dominance is going to continue to grow. I do believe that these scams and what Michael Saylor is saying is true. But one thing I disagree with him on is the fact that Web3 is going to continue to foster growth and continue to merge the convergence of multiple technologies, AI and blockchain. And I don't think that Bitcoin alone is going to do that. And that's where I think Michael Saylor is missing the boat. He's not talking about the actual convergence, the importance of these technologies and how they relate with one another. We've taken, let's add another pillar to it. You got blockchain, you got AI, now you got genomics. We know genomics is coming. We all care about our health. I'd rather take a drug that has a proven history from scientific data, utilizing rapid computational power and AI to make sure that I live a healthy, fruitful, improved quality of life, right? Like, who would not want to have better quality of life? So you have genomics. This is another innovation pillar. Kathy Wood talks about these things. So you got blockchain, AI, you got that trust now, because where I'm just like fast forwarding in the future here. This is why it excites me, is that you got the AI convergence with blockchain, but then you have genomics convergence, because the same issues we see with AI and private data is the same issues that we see with genomics. You have to do this research. Then we have to trust the AI that's coming up with new drugs, innovative drugs, because humans can't compute as fast as AI can together on a global scale. And then we have blockchain helping out the training data sets. There are projects right now that are active, focusing on the singularity. Let's get general artificial intelligence decentralized. We have this huge opportunity in front of us. I think far surpasses $27 trillion tsunami just from the United States. This is huge. This is way bigger than anybody thinks. People say, oh, Bitcoin going $1 million. I'm like, there's no glass ceiling here. Why does Bitcoin need to stop at $1 million? Could it go to $1 billion? Where does Bitcoin stop? There's nothing stopping it. And we never had an asset in human history that does that.
Yeah, the globally connected asset that is decentralized and verified, has a verification, avoids a double spend. I think what you're talking about is recursion in a lot of ways, right? And recursion is the idea in computer science that the thing that happened before affects the next thing that happens. And we see this with technology, and the growth of technology is we have recursion in technologies, that the thing that we invented before affects the next thing that becomes invented. And now we are beginning to move at such a rapid pace that is unprecedented in our history. The effects of recursion are going to continue to increase, and it's going to, even very intelligent people who are very technologically savvy and have brilliant ideas that create tons of money, will fall prey to recursion and fail to see and understand like the next technological development or the way that past technologies come together to create something new. And I think we're going to see this more and more and more. And like in the past, maybe a human would see this once or twice, maybe 3 times in their lifetime. We are going to see this multiple times in a lifetime, and at some point, multiple times within a decade or even a year.
The multiplier is real. And it reminds me of something you brought up earlier to me about North Carolina, the House investigation on Bitcoin.
Oh, yeah.
Just go ahead and hear about that. Why is that important?
Yeah, so North Carolina, the House has passed a bill to look into Bitcoin and other digital assets as a hedge against inflation, which is super, super exciting. Let's see if I can pull up this this image here really quick. But basically, they're saying, hey, digital assets are a hedge against inflation, that we can use these assets as a way to preserve our assets within the state. And so you've got North Carolina that's saying, hey, maybe we can use Bitcoin to preserve the wealth that we have in this state, so that we can like fund our public projects and our public utility, right?
Mm-hmm. It's interesting because it gives validation in regards to the inflation hedge.
Right. Absolutely.
And so that to me is like huge cause and effect. Again, though, there's a bit of unfair access when you have large market players like Jamie Dimon basically creating manipulation, the federal government in regards to quantitative tightening. I mean, they're manipulating the market.
They are, absolutely.
If the Fed did not manipulate the market with its quantitative tightening and quantitative easing, where would we be now, right? What would the marketplace look like now? Well, to me, that seems far more fair, right, than what's happening. And it's such a double-edged sword. It's a love-hate relationship, because on the one side, I really value that government coming in and adding security, hopefully to provide fairness. Like that to me is to me the value prop is like it's giving fairness to a marketplace. But at the same time, this manipulation seems unfair. It's like I'm so conflicted here in regards to what's actually happening. I do believe that as we move forward in this industry, the global focus is going to remain out of the control of the Fed's power. And so we've seen that right now with IMF. Oh, shoot, we can't do it. Something that's really interesting, I think people don't think about, is the Fed is utilizing AI to perform simulations. And they're going in their meeting rooms and they're sitting there bringing in all these simulations. They're having meetings, and what they're doing is just trying to make decisions on their best simulation that works in their favor. I find that interesting too. Should we have access to that data? You know, I think that if they're going to go ahead and do simulations and make decisions, they should provide the people the data, how they're making these decisions. All right, you got something up on the screen.
Yeah, so this is just a copy of that bill with a big red underline showing that you hear virtual currency as defined in 208, such as Bitcoin, that may be held on behalf of the state, the expected impact portion of the general fund for investment for metal bullion and virtual currency to hedge against inflation. So they're saying, hey, virtual currencies can be a hedge against inflation the same way as metal bullion, right? I.e. gold and in a smaller measure silver can be used to hedge against inflation. So yeah, there you go. You know, in the case of like Jamie Dimon, and maybe this is a cynical take, but I see that they don't necessarily like something like Bitcoin unless they can use it for their own wealth. What they really want is a JPMC, JP Morgan coin, right?
Yeah, it's not going to work. But one thing I just hear on the section 2 on your screen share here, you have $50,000 for 2023, 2022. Does that mean that that's as much as they're looking at for providing general fund? Earlier, I talked about corporations are going to be incentivized to incorporate digital currencies in their treasury basket. And this seems to me that the government is doing that as well right here. They're saying that they're allocating $50,000 for the study.
$50,000
for the study. Okay.
For the study, right. So to pay some PhD that's a candidate at one of their graduate schools in North Carolina. I don't know, I'm making this up. This is my story, that they're gonna, pay this, and the PhD is gonna, the candidate, he's gonna or she's gonna do the research and, produce some kind of publication that'll get published in a Wiley document or something. I don't know, I'm making a story up. Well,
let's just skip. The section 2 is super meaty. It's so short, but super meaty. Follow me here on this one, right? So I get it, $50,000 for a study, but why would they be doing that? The key word here is general fund of the Department of State Treasurer. That is the treasury reserves for the government to use to make decisions and fund them, right? So treasury management. So if they're going to generate a report, so they're spending $50,000 to gain information. Then when they publicize that, every other municipality is going to sit there and look at their treasury reserve and say, maybe we should modify our general fund.
Absolutely.
Would they be doing that with any other asset other than Bitcoin? Do you think that they would include?
I don't know. It says Bitcoin and other virtual currencies. So yeah, it could be a bad. I'm just guessing they won't be 100% in on Bitcoin. Probably be a basket. Some gold, some silver, some Bitcoin, some Ether, maybe a couple other of like the top 10, Again, just guessing. I have no insider information, far away from North Carolina, but I would suppose that's probably what that could look like. A basket, right?
It's a basket. It reminds me of the International Monetary Fund. I'm like, okay, great. So who's going to be the IMF of this new future with Web3 blockchain technologies?
Right. So I think it's really interesting. North Carolina is doing this. Wyoming in the recent past has made themselves a crypto-friendly state. And so you've got states that are, Okay, just like El Salvador, a small country, has adopted Bitcoin, you know, like Argentina's thinking about it as like a way to get out from under the IMF, and the IMF is breathlessly telling them, don't do it, don't do it, don't do it. You're going to have states that are maybe smaller or experiencing population decline over the last several decades, and they're going to be looking for ways that they can protect themselves and create a place that people would like to come. You know, you've got Raleigh there in North Carolina, and that whole Tri-City area that has been recognized as like one of the tech hubs in America. And I'm sure that they're interested in expanding that and holding that position as like confirming Raleigh as a tech hub. And if North Carolina can be one of the first states to actually do this with a tech hub, as far as I know, Wyoming doesn't have a city that's like known largely as a tech hub. You know, that only serves to benefit them. And
JP, I gotta jump in here on this. Like I have experience working in Silicon Valley, right? And so one thing that I did at the beginning of my tech career was, how do I gain access to Silicon Valley to get that experience? And it was so concentrated. Everybody with tech talent knew you go to Silicon Valley, like myself, right? Get your foot in the door, you'll be set for life, right? True, it's largely true. But then, you know, having experience on that made me realize, wow, I really love decentralized technologies. And I work with decentralized technology long before Bitcoin. And so I've already had appreciation for it. But the fact is, when I start thinking about democracy and what that means to me and fair access to marketplace participation, I start getting super excited about removing the concentration from Silicon Valley. And now that we went through the pandemic, we went through the work from home, and here we are connecting. We're large apart geographically, and we're connected right now to share stories, to talk. Like, this is the power of decentralization. This is the power of instant communications globally. We are, without a doubt, in a world of change. Silicon Valley is no longer going to be the main hub. And I don't think it's fair to say that anybody should be a main hub. I think that it should be anywhere with a connection is a hub. And I like that idea much better because there's so much more access. Even makes me think about like fair access to wage earning capacity. It should be globalized, right? Like, why should we so you're in a region that has low value, you know, that just entices people to take advantage of people with lower value. And I don't, like, to me, $1 here and $1 over there should be the same. If you can do the same thing in the same amount of time is what matters. And so definitely things are changing. You know, MicroStrategy, they've recently even acquired more Bitcoin, like 12,333 Bitcoin. Yeah. Something you mentioned is like 7 days ago, they're actually profitable. And when you look at these advancements, like regulators going ahead and doing research and development in this space, constantly doing it, looking at new ways to take advantage of this technology. Here's MicroStrategy in the background building its treasury reserves. And we're seeing stuff like the policy that you were just talking about, that aids to research and development, only $50,000, not a large sum, but $50,000 is going to bring research data, and then its ability to share that out to everybody else that's interested in the regulatory framework. They're going to be like, wow, maybe we should be looking at modifying our treasury reserve. But MicroStrategy's done that. And the reason why the stock is blowing up is because of the way it's managing its portfolio with Bitcoin. Now, corporations that don't have a way to manage those digital assets, they invest in MicroStrategy. One day, that's not going to be there. It's going to be a framework. Everyone's going to have fair access. You don't need to buy MicroStrategy stock. But this seems like MicroStrategy is building a bit of a playbook for corporations.
For sure. It's interesting, the timing of this is like deep bear market. Bitcoin was around $25,000. And like, oh, is it going to go lower? And then here now you have MicroStrategy buying more. You have the announcement of Blackrock. Like, everything changes now, right? And so maybe this is a way out of this bear market that we've been in crypto. If you would say, hey, is $30,000 too much to pay for? If you ask MicroStrategies, they're buying 12,000 plus Bitcoins, like they think it's a great deal. So yeah, they've been DCAing, right? You could say that. Their average cost is currently at like $29,803 per Bitcoin, and Bitcoin as of today, it's $30,556.43 when I looked at it. So they are profitable. at this point in time. And if you do the math, it's like a little more than $10 million that they broke on profit. So, good job to MicroStrategy, Michael Saylor. I think it's only going to go up from there. And as you say, they're building a treasury for research and development, and what they're going to be, it's going to be huge.
It's huge. Like I believe we still have tons of games in front of us. I think it's awfully frothy right now. I think that the markets are obviously being manipulated by the Fed. I mean, we all agree to that. But every bear market has bounces, and I believe we're in one now this summer. I think that we have some issues in front of us. We haven't solved these problems. Inflation, that's one issue, but the way that we look at monetary funds is another issue. The way that we look at trust in our governments and their policy, another issue. It's just so rich right now for all these conflicts in a geopolitical way that's ultimately going to end up benefiting. When we look ahead and we zoom out, and it's like, holy cow, look at the history. It has done nothing but gone up in regards to its adoption curve. If you look like Bitcoin, just its adoption curve, it's constantly up. It's never actually made a real new low. It's like even right now, like Bitcoin from a valuation standpoint, you just zoom out from the pricing and you go to a chart, like a logarithmic chart. I mean, it's constantly on the up cycle.
Right.
It's interesting how parabolic adoption on the S curve works. I don't even think we've seen a true parabolic growth cycle in Bitcoin yet from a market cap perspective in regards to global reach. The valuations, it's kind of scary where it can go. And it makes me think about the concentration of MicroStrategy. Like I'm really loving what MicroStrategy is doing, but at the same time, holding on that Bitcoin in the world where it goes up so dramatically, like, wow, that's kind of surreal that you're getting these players owning, like MicroStrategy soon is going to have like 1% of the total supply of Bitcoin. It's like, I'd rather having more people have more supply, like the more average person.
I would too. This is a complaint of Bitcoin, is that in some ways it's just more of the same, or you are going to get a shakeup. You always get a shakeup, but it's those people who already have are able to get more, and it's just more of that. It's just more of the same, just different.
More of the same, yes. Oh my goodness. Well, we've chatted for a long time here. I know that we can talk for so much more. We had more that we'd like to talk about. Something I'm really passionate about. I would like to do a deep dive in the future is about ISO 222, which is all about creating a standard for payments. It's already here. It's already in place. I would love to talk about it. I think this is going to take too much time. So if you don't mind, I'd like to table it, this session, for another time period, because
let's do a deep dive.
Yeah, we'll do a deep dive on it. We'll do like a full circle report on ISO 222 and how it will affect the marketplace as we go through the ebb and flows of its growth cycle.
Well, before we wrap this up, I've got like an 11-second video of Lightning Network versus American Express MasterCard. You want to see it?
Oh, yes, please. Give me some candy. This sounds juicy. Yes, let's see. All right.
Let me cue this up. Let's see here. So this is Lightning payment versus MasterCard. Let's go. There you go. Lightning about 8-9 seconds.
What are they on the same network? Is this fair? Is this like to like? Like, I mean, you could have one on a different network.
Well, I think they're. I mean, this one device is actually wired. The MasterCard device is wired in, and then it looks like the other device it looks to be cordless, so over Wi-Fi, I would suppose.
I know.
So
that's super
normally
cool.
you would favor the wired network, right? So if anyone has, and I don't know, maybe I'm incorrect here. Someone knows, they can correct us, but yeah, I would assume that the wired network would have like an innate advantage over the Wi-Fi.
You would think so. You got Wi-Fi, right? And Wi-Fi has typically been half the speed of a hardwired system because it has a send and then receive transmission. It has so many channels to do that with, right? So it's always been more latent than a hardwired connection. Hardwired connection very much bi-directional in the way that it communicates, so it's naturally going to be 2 times faster from the way that you transmit those packets across the line. So it makes sense that there's going to be more latency with Wi-Fi because you have the acknowledgement side of these data packets. But more important, what's going on there is that, sure, we can assume that that wired connection is going to be bidirectional, is going to be more efficient. But the truth is, there could be a terminal, a point of sales terminal that depends on a gateway. It depends on a response from this gateway. That's what's causing additional latency. Seems natural. I have gateway services. They certainly can create latency. But even more so is what if they didn't have a hardwire? What if they had a Wi-Fi repeater connected to a Cat5, taking Wi-Fi and converting it to hardwire, which then would increase latency of the connection by 2-fold, right? When you're talking about recursion, like, ooh, that we're doing that here with the way that we look at data connectivity and its transferability. But still, it doesn't even matter. Like, yes, it does matter. I would love to know, is it a true like-to-like test? Are we on the same network? Is there no, is it a fair comparison between the two? I really would like to know that so I can have trust in it. It's super exciting. I think it's a no-brainer. You're taking out the middle person. So I'm going to say it's more efficient. I'm super excited about Lightning. I'm super excited. And this gives power to Litecoin. Like Litecoin network, the one thing I loved about Litecoin was the fact that this was the test net, in a sense, for Bitcoin, but in a public scale and another way to truly test it in another marketplace, right? And so I always valued Litecoin because I believe like Litecoin was the first one to release Lightning. First one. And that's where I really got to dig into Lightning and understand the value of watchtowers. I attended a Litecoin conference. I even got to ask about the security. I was like, well, watchtowers can be manipulated, incentivized to cause harm, create scam.
Right.
But there's power in numbers, the more they call them watchtowers. I'm not too sure. I need to read what's going on with the latest Litecoin. But before, security was done by these things called watchtowers. And so I don't know. It's been time tested now. When I first was criticizing it back in the day, I was too focused on how it could be manipulated. It's just repeating the same mistakes. But what's proven to me is the power of Lightning giving more efficiency as another layer. I look at Lightning as basically layer 2 to Bitcoin. Bitcoin's layer 1, Lightning's layer 2. And again, this excites me about Web3 because it gives layers new access. And El Salvador, the reason why they adopted Bitcoin is because of Lightning. Like if Lightning didn't exist, El Salvador would not adopt it.
It would be harder to make the case. It just moves too slow.
Yeah. It was not about moving just too slow. It's about the cost of the transaction itself too.
Sure. Right.
Yeah. That's super cool though. What an interesting world where now we're finally comparing legacy transactions from a consumer provider like MasterCard. And here they are potentially, Lightning. I mean, we need to fact check this, but from that video, indeed, it was so much faster. It's super exciting that we have that today, that we actually can do that comparison from a transactional standpoint. And that's, again, global reach. Some people have businesses, and they can't even get approved to have gateway services to accept MasterCard payments. But with Lightning, they don't need to ask permission. They just jump on the network.
Permission. There you go.
How freaking cool is that? I love it. We are in a great place. So, hey, we've talked a lot. We have so much more to talk about. I'm looking forward to breaking stuff down in the future. We ranted on. I want to say that's it for us today. But for all the folks out there, this is like the 4th industrial revolution. I'm super excited about the way that digital payments are progressing, the way that we look at tokenization, the world of blockchain technologies, Bitcoin, Web3, the intersect of all these technologies converging together super excites me. I think that's a given here. But moving forward, like it's really about the whole point of this show is to make sure that everybody, no matter where you're at in this world of crypto, where you're just a user, you want to be informed. If you're a product leader building in the space, or if you're a developer building, like we want to give you information. We want to focus on things that matter to actually contributing to the innovation of this global marketplace of innovating the next things in this digital world of ours. Definitely, we want to be a part of it, and we want you to be a part of it too. So, JP, how do we go ahead and connect up? I think on Twitter, folks, you can reach me on Twitter at Brandy Lee 79. That's at BRANDYLEE 79. What's your Twitter handle?
Yeah, you can find me JPZXYZ, and I think you can find me like that almost anywhere.
I will say, don't expect fast responses from me. The only way that I concentrate is by practicing a bit of digital detox. I get sucked into social networking, so there's definitely latency. But when I get pinged a lot, and it's urgent, or folks say, hey, you need to respond, yeah, you're going to get a response from me. So I just want to make sure I'm not over-promising and under-delivering on this one. Do not expect fast responses, but let's stay in touch. And the value for it is not to just get responsive from us. It's really to get the content that we develop over time. We're going to end up providing cool pieces of content out on various social networks. Twitter is going to be one of them. We'll share more in the future.
All right, this has been great. Let's do it again. Yeah,
sounds good, JP. All right, thank you so much. You have a great day. To the community, have a great day. Champion On is not going down. Yeah, this industry is going to grow. Exciting times ahead. We look forward to sharing it with you all. Bye for now.